Good afternoon. Welcome back to the commodities update video, and congratulations to the bulls for a nice 2-day move this week. More like 4 days move from down here to up here, 18%. So natural gas bulls are quite happy. And let's see how far this move is going to be. So we'll be looking at today, we'll be looking at natural gas, oil, silver, gold, as well as the US dollar. And we'll be breaking down support and resistance levels to potentially play off of and see where it might levels might reject from, as well as where to take profits or where to add positions, as well as what's my most likely scenario prices going to next week. So tomorrow I'm going to be on cruise in the States for 7 days. I'm going to go to San Diego and San Francisco and live in Mexico. So I'll probably be gone all next week until Saturday. And I might try to squeeze one video in, but if not, then you guys know where I'm at. All right, so let's get started. I'll be doing the stock market update video right after this one. So stock market video would be S&P 500, QQ, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. All right, let's get started with natural gas. And yeah, so yesterday we tested this yellow looking line, which is a 200-day moving average. And you just type in indicator, moving average, and you type 200, you get this yellow line. And essentially, 200-day moving average is the one that a lot of people looks at overall for the longer term trend. And you can see that back here, it's always acting as supports along the way. And since we got this huge drop here, we've been under it since October of 2022. And you can see we have rejected here as well, one touch here, and then we never touched it again because half of this, how big this drop is. And finally, we retested it yesterday. Slight rejection. You can see just a top, bulls taking a break after a big move. A little bit of a wick, but that was not a real rejection. It was just a consolidation. You can see we touch it right there, and then just consolidate sideways for the next move up. So we broke above it this morning. What I liked about it is that you guys know how I always talk about back tested, right? So we had one back there on Wednesday, broke above, back test that downtrending maroon looking line support, which is this tightening range that we have been looking at for a very, very long time, months. So we back tested this downtrending maroon line as support on Wednesday. Let me zoom in again. So right there, we broke above it, right? We broke above it here, back tested, bulls held it, bounced, good sign. So then we went higher. And then, so we tested the 12 EMA here, 200 day EMA moving average here. And then broke above it, back tested it again right there. So that's a good sign. When we back test prior resistance, now acting as support. So now it's acting as support. You see bulls come back in for another bull volume for the next move up. And then we have broken above the 200-day moving average on the daily time frame. That's a good sign. You can see that 200-day moving average was right there at this 1.78. So exactly where we back tested. So let's take a look at which level will potentially be likely rejecting from maybe like a consolidation, like slight little pullback or go sideways a little bit before next moves happens, stuff like that. So now we zoom to the hourly charts. There's no signs of slowdown yet. So yesterday I talked about this being a bull flag. Bull, this is the flag. And we had a bull flag confirmed today, broke out, back test, bounce again. Right now, the hourly chart, no signs of slowdown yet. Although we got this candle, slightly red, but it's not even below the prior one yet. So we don't even have a hourly consolidation at this moment. So we'll see how much this hourly consolidation is going to be when it pulls back. And as long as it doesn't pull back too much, no red flags for even on the smaller term time frame of the hourly charts. But let me just take a look here. I do see we might have a megaphone resistance. Let's just draw it together. Extension line. So this one does look like a slight resistance. So we're pretty close to it. You can see this was acting as support. Some support here. Resistance, very clear resistance. Resistance 2 times. Resistance 3, 4, 5. And we are, let's see, about 3% away. So Might pull back if we do touch here, because it's not because of this resistance. It's because of this resistance plus how fast we have ran up. You guys know when I talk about this speed of the move. If you ran way too fast and then just hit a wall of resistance, then bulls are tired because you've been running a marathon and now you hit a wall and you need a lot of breaks versus if you're just consolidating like this, you're taking breaks in between and taking break between and then hit the resistance. The chances of that getting over resistance is much more likely than going straight up and hit strong resistance. Let's take a look at this structure here, see where resistance might coincide with each other. Some horizontal lines. Let's take a look. So we have some here, as well as we do have some here as well. So yeah, so 3.78 is going to be the first one I'm looking at. And if we get over that, then we're looking back up at this 3.46. But we will hit this maroon looking line before we hit 3.46. So pretty much this zone will have a bunch of resistance. And yeah, so if we get hourly downtrend after hitting here, so we come back up and get an hourly downtrend, then that will likely mark the temporary top. Doesn't mean we can't go higher. It just means that we need some kind of consolidation, just like these moves, right? Just like these drops, and then it consolidates, it bounces, right? Then it head lower. Just same thing. If we have a big bounce here, hit strong resistance, we can pull back a little bit, consolidate, cool things off, and then head higher, right? But that is still the temporary top. You know what I mean? So we'll see if we get an hourly downtrend at these levels. So if that happens, then that may mark the temporary top. Maybe some daily consolidation going on, and we'll see how far this daily consolidation is going to be. So if let's say we hit here, just hypothetically, right here to all the way there would be quite a decent move. And let's say we just pull back all the way back to 3.2, right? That is still a bull flag, a daily bull flag here. We pull back all the way down here to this yellow looking box, which is 38.2% retracement. But obviously, if we do break through that bull flag is negated. But as of now, we don't even have signs of pullback yet. But I'm just giving you guys this scenarios beforehand for next week because I'm not going to be here. And just in case, we pull back, and you guys can see the size of the retracements. So to get a better understanding of what's a healthy pullback and what's a non-healthy pullback. But we are a little bit overbought on the daily, but that's not that big of a deal at the moment. Just got there. Commodities can stay overbought. Just like you can see how gold has been oversold for such a long time and it's still oversold. So I don't want to take just one indicator as by itself. So let's say we come back all the way here, right? We get to overbought and we hit strong resistance levels and we see signs of hourly downtrends. Then that's 3 or 4 coinciding evidence, right? Coinciding together that we may potentially take some profit. But it's up to you guys to decide. So let's take a look at UNG. So UNG very similar because Natgas broke out. UNG also broke out. So very similar price action on Wednesday. Broke out of this falling wedge that we've been looking for a very long time. Same thing as that tightening range on Natgas. Back tested here. You can see we got out of it. Back tested, bounce. Got a follow through for 2 days. And we've pretty much broken above most of the resistance. So I was talking about where there is not a lot of volume around this area. So it's not a lot of resistance after we break 1.42. More resistance here from yesterday. But we're above it. So it was a lot easier for us to get through this one. So yesterday was more of the hard work. Today was just more follow through. We're also back up again, this structure here. So pretty much, let's see if the 200-day moving average was acting as resistance before, this yellow looking line. Yeah, it was actually at resistance here. So pretty clear as well, resistance, support, resistant, there's support. So there is some resistance there. So let's say we're still under that. So we may act as resistance when we come to it. We're pretty close to it. 7.92, pretty much just right under it. 2.4%. There shouldn't be a lot of resistance here because there's not a lot of volume here as well. But this depends on that natural gas to see if you can break above to this level. Does then you'll likely be testing the 200-day moving average if natural gas has one more leg up. You guys can see that this 8.13 is going to be pretty strong resistance due to all of this. Lower wicks here has support, so now it's going to act as strong resistance. Yeah, so quite a bit away, but we'll see how we test that 200-day moving average when we touch it next week or not. But still 5% away from this one and 2.4% on this one. All right, let's take a look at oil. Well, zero signs of bounce. I talked about the 12 EMA, this teal looking line on the hourly charts. That's the very minimum. Bulls need to get over. If they can't get over that, nothing's going to bounce. So if it keeps on trending down and rejecting from it, yeah, bulls aren't really going anywhere. But it's starting to flatten out. So if it flattens out long enough, it's going to get over it because this EMA ends up catching up as well. So, but even though it gets over it, if we don't get even an hourly uptrend back to the bulls' favor, it won't really bounce that much. So thing I want to see for oil bulls is an hourly uptrend. If not, hourly downtrend continues and it's in full bear control at this moment. Although we did make a new low today without much follow through. So there may be signs. If we get an hourly uptrend here, then we may come back up, bounce to retest this 75.18. Very first step, hourly uptrend, and test the 78.5 level. And we can't get over that, then it's just a huge daily bear flag. But now we will have to see the size of the bounce. Yeah. So we have one evidence. Lacking follow through. Lower low. Broke below yesterday's low. Bears lacking follow through. That's about it. Like you can cut them some slack after a 11% drop, 12% drop in oil, right? Lower low lacking follow through. It's not that big of a deal, right? It's like, okay, whatever, right? It may just be a bear break, and the bears are like, okay, we're just gonna cover some shorts and come back up. As of now, no structural change at all for the bulls, and that's probably the top for oil for now, based on the charts. So let's take a look at gold. So gold finally had a tiny green day after the dollar had 3 red days. Pretty sure it's 3 red days. Let's take a look. Yeah, 3 red days on the dollar. And all we did was this. So metals are still super relatively weak, despite being insanely how oversold this was. Was it 19 on the RSI, and hitting support zone at the same time, holding the support zone, and the dollar being weak. All 3 of these putting together, and we just got it 0.5% on gold. So that is still relatively weak. Overall, we had 3 things going for gold metals overall, and we didn't see any metal bulls take advantage of it. So yeah, they don't step up soon, and the dollar decides to have that head and shoulders pattern that I was talking about potentially shaping up. But if we bounce for another 2 days, right, is this thing gonna go break support and go down here or not? Because we dropped for 3 days, this thing didn't even bounce. So who knows? Maybe when the dollar bounces for 2 days just to cool things off a little bit, get that head and shoulders in on that 2-day little bounce over here. Well, maybe gold will have another leg down, right? So I'll have to see if it actually ends up performing on Monday or not after dollar weakness. Let's see. Hourly chart. Let's take a look here. Yeah, looking like a megaphone support. Like that. See the support resistance. So it's like a big megaphone. Resistance support. Yeah, so if it doesn't even get out of this little megaphone on the hourly chart, it's really not going anywhere. This is just big enough hourly bounce. Now bulls can finally potentially shape up an hourly uptrend here for the first time. You can see all these bounces are so small. Just one red candle, right? You're testing the lows again. So there's no room for the trend change to happen for the hourly. Now we have a big enough bounce. Even if we pull back a little bit, there's room for higher lows here. So the trend changed uptrend on the hourly for bulls. Hourly uptrend here, then this could be potentially the bottom of this drop. So see, all right, let's look at the dollar. Big bounce this morning on the dollar because of the insane jobs data that we got today on it was super hot, came in, so potentially the economy is still hot apparently, and then just reversed the whole thing. So yeah, even in the morning the whole market dropped, and you can see we closed pretty darn green. You guys can go to my stock market video after this one. I'm gonna go record it after this, but yeah, let's take a look at the dollar. So dollar is 3 days pullback so far, and hourly trend was intact on the downtrend, but this data candle just skewed it. So now we're like in a neutral trend, but then we kind of closed even lower. So I was gonna say, as long as the hourly downtrend is intact, we will continue to follow it, but not because of this candle. We're in a neutral, but the idea is still there. You guys get it. We're making lower lows, and if we do break this, there's an hourly bear flag. It's a bear flag because it's a weak bounce. We're still way below the 38.2% mark. So if this confirms, breaks today's low, that will be hourly bear flag confirming and following through. And we have finally broken below that 12 EMA that I've been talking about a lot. Teal looking line. Every time we touch it, we bounce it. Today, we close below it just slightly. So if we gap up on Monday, then that is a fake out. But we'll see what happens on Monday. Go a little bit slightly lower than that head and shoulders pattern. Left shoulder, head. Go just a little bit slightly lower, then we can start forming that head and shoulders look. So that's a bearish pattern. Head and shoulders means psychology of it is from an uptrend into a downtrend if it confirms. So that's where the neckline is. We still need one more red day, and then slight bounce for the next couple of days, and then drop to a new low for that to confirm. And we'll see how it happens. So that bear flag ends up falling through, and that'll be good for the overall stock market and the metal bulls. Just like this. What do we want? So what gold wants to see is what silver is doing. You can see taking advantage of dollar weakness today, and we have a 2.6% bounce. Very clear. For here, triple bottom, 20.7. Silver usually leads, so if silver continues to bounce another day, we may see gold bounce bigger, not bigger, but like as in bigger than what we had today. And yeah, we'll see if gold can catch up. But as of now, there's just one candle. Doesn't mean it's everything is still in the downtrend. Daily downtrend, 4-hour downtrend. Or let's see, it's a choppy. Yeah, 4-hour neutral, but it's not that big of a deal for me. So what I want to see now is hourly trend changes. Back to the bulls. Let's see, do we get that? Big enough bounce. Lower wick. Broke out this high. So we have an hourly uptrend now. So we confirmed it right there at this candle. We got some full follow through right after that. And we broke above 21.28. And we couldn't get over this little structure here. So that's a little bit I want to say too weak because we did bounce 2.6%, but there's not that much resistance here. So I want to see silver bulls take us back above to 22.24. Because 22.44 is a super strong support. Now acting is going to act as super strong resistance. So we'll see if that can happen or not. 3%. Yeah, we're probably going to reject from this initially. And we'll see the size of the pullback. If it's a weak pullback, then we may potentially break above it. the strong pullback, like we retraced 50% of it.